This is Matthew Cratter from Trader University, and today I want to talk about China's plan for world domination, especially how it's using and exploiting the current financial system, which is the US dollar financial system. If you're interested in learning how the US economy works, how the global economy works, so you can make money in bull or bear markets and protect your family's wealth, then be sure to hit that subscribe button. So we're going to talk about trade deficits, we're going to talk about the US dollar, and how China is exploiting the current system to take over huge parts of the world. A lot of people are not aware that this is happening, so I think it's important to talk about. Now, we'll start with the large trade deficits that the US runs with China. All this means is that the US imports more stuff from China than it exports to China. This can include goods and services. And so what this means is that China ends up with extra US dollars on its hands, simply because it's exporting more to the US than it's importing from the US. These trade deficits are always measured between two countries, between two trading partners. Now, everything was well and good until about 2013, late 2013, because what China did with these excess US dollars is it recycled them back into US Treasuries. It used those dollars and reinvested in the US. It bought US government bonds, which are what US Treasuries are. Now, this was great because it allowed the US to continue to run big budget deficits. So the US federal government, for as long as we can remember, really since around 99 or 2000, has been spending more than it takes in taxes, so it needs to borrow money. And the Asian countries, particularly China and Japan, have been lending us that money for a very long period of time. So this worked well for a while, and this was sort of the deal, that China helped the U.S. to finance its government deficit spending. Then I should say parenthetically, and this is a very big parenthetical, this whole system has been extremely bad for the working class and for the middle class in the United States, especially manufacturing jobs, which have all been shipped overseas, mostly to Asia. And this is a case of the elites betraying the middle class, the working class, basically hollowing them out. But the reason they did that is this system was very good for people in finance. It was good for wealthier people. It was good for people who own real estate, people who own stocks, people who worked in finance and hedge funds, etc. Low and falling interest rates helped to prop up all asset prices and make people who are invested in stocks or bonds or real estate very wealthy. So this was sort of the deal. It did help. Working class and middle class people to the extent that they did own their own homes. So it helped to keep interest rates low, and it allowed people to repeatedly refi their mortgages and take cash out in many cases, and then buy more stuff from China. So this is the great recycling loop that was happening. Basically, the more stuff we bought from China using mortgage refis and equity loans against our houses, the more stuff we could buy from China, the more US dollars they would have, and they'd be able to recycle it back into US Treasuries. So this was really the system from about 2000. I believe China entered the WTO in 2001. So from about 2001 or so until 2013. Now, this entire time, government debt, as we all know, has just been rising and rising and rising. And China, we can see here, these are China's holdings of U.S. Treasuries, U.S. government bonds. And we can see from 2000 all the way up until, call it 2012, that China was accumulating these treasuries, buying more and more, basically recycling these U.S. dollars back into treasuries. But really since late 2013, I want to say it's the third quarter of 2013, China has been investing, recycling fewer dollars back into U.S. government bonds. I would say that they were very spooked by the way things were handled in 2008 and 2009, especially the fact that all the quantitative easing that happened then really continued. We had QE1 in, call it 2009, we had QE2, we had QE3, etc., which was basically devaluing the US dollar. And so if you're a holder of government securities, US government securities, you don't want to see the US dollar being devalued. But China had other strategic reasons for this, which we're going to see. So instead of recycling these US dollars back into Treasuries, the decision was made to reinvest them in companies and in hard assets. So China, for the last, call it 7 years, has been making a major play to buy up American farms, farmland, American agricultural companies, as well as farming, mining companies around the world, as we're going to see. The great example of this, also from 2013, right when they stopped buying as many treasuries. And the one thing to keep in mind is that the percentage of treasuries that China was buying, even though this doesn't look like it shrunk that much, as a percentage of the total treasuries out there, because the amount of total treasuries out there, the dollar face amount has exploded. China is really, more than you can see from this chart, really giving up on financing U.S. deficit spending. So instead, they decided to recycle the money back into buying American assets, and as we'll see, Asian assets, African assets, etc. And this article points out that China was especially interested in the U.S. hog industry. Obviously, pork is very popular in China, as it is in many parts of the world. As of the date of this article in 2017, it said that China now controls more than 400 U.S. farms, 33 food processing plants, and 1 out of every 4 hogs in the United States. And this is mostly because a Chinese company called Shuanghui bought Smithfield Company, which was a pork producer, and this came along with, this included 100,000 acres of U.S. farmland. Now, in addition to that, China's been using these U.S. dollars, especially in 2020, to accumulate massive amounts of crude oil, especially when crude got very cheap in April, when it went to zero in the futures. China has been using it to fill up their strategic petroleum reserves. Now, I'm going to tell you about something that most Americans don't know about, probably most Europeans don't know about either, the One Belt, One Road initiative. This is a global strategy to invest in infrastructure that was begun in 2013, the exact same year when they stopped increasing their holdings of U.S. Treasuries. And this suggests one reason why. This was a centerpiece of Chinese Communist Party foreign policy. And basically the idea is to invest in all these different countries, all these different international organizations, and basically buy their way into power and control, as well as control of natural resources. Now, the target for the completion of this, to give you an idea of how the Chinese government thinks, is 2049, which will coincide with the 100th anniversary of the founding of the People's Republic of China. So this is the Belt and Road Initiative, sometimes called OBOR, One Belt, One Road. And it really is a Chinese takeover of the world. I'll link to this article, how Chinese financing is fueling mega projects around the world. Great example, China basically in Zimbabwe, they gifted the country of Zimbabwe a brand new parliament building that cost 140 million US dollars, just a way of perhaps getting access to the mines there and getting buying influence. Something very similar, investing in $46 billion investment in the power grid in Pakistan, as well as their transport. You can see new highways, new power plants, new railways, and new mines. Most importantly, Ethiopia as well, new railways, expanding the airports, etc., and even a gift of a $200 million complex for the African Union headquarters. We can see increasing Chinese loans to Africa, and then some more stuff for Sri Lanka. There's a great map here where you can really scroll in and see all the hotspots. Obviously, China extremely interested in taking over Africa and getting access to the industrial metals there, the precious metals like gold, as well as all the crude oil, obviously. And this is somewhere where China has really jumped ahead of the U.S. in terms of influence. Again, using U.S. dollars, using its powerful trade surpluses with the rest of the world to do this. Even this year, there's been a lot of, as the gold rally has continued, China's been buying Canadian gold miners. And also linked to this article, it talks about the social impact of how Chinese companies and the Chinese government run their mining operations in Africa. And it's not a pretty sight. They tend to do a lot of provide very poor working conditions. There's a lot of environmental degradation. They bring in a huge number of Chinese workers who displace the local workers, and this has created a lot of ill will, as well as a lot of environmental destruction. Here's another example from Sierra Leone, where all the Chinese workers are being brought in and displacing local workers at the mines as China takes them over. I'll have linked to another article about how there's been a 25-fold jump in investment over 10 years in Chinese investment in African mines. Especially, this is very interesting. This is the China General Nuclear Power Corporation's investment in the uranium mine, presumably for nuclear power, could be for nuclear weapons as well, in Namibia. Now, what's the ultimate goal of this? Well, the ultimate goal is to move much more to the Chinese currency, to the renminbi or yuan. And what a lot of people don't realize is that China has begun to price oil in yuan, and it's actually set up a new futures exchange since I think it was founded in 2018 in Shanghai, where you can where the Chinese for the first time are really allowing the wholesale purchase of crude oil using yuan, which is the Chinese currency. Globally, really since 1971, when the U.S. went off the gold standard, crude oil has been priced solely in U.S. dollars. Saddam Hussein tried to price his oil in euros, and he was dead a couple years later. But China has been very successful here. It looks like 10 to 11% of the global volume for crude oil futures contracts has now moved away from dollars and into yuan. Now, this is nice for China. This is everyone wants to be able to print their own local currency to buy crude oil. This is one of the U.S.'s great. This is one of the U.S.'s great advantages. We can actually print money and use it to buy crude oil around the world, whereas everyone else has to somehow get their hands on U.S. dollars. And this is what France called the U.S. dollar's exorbitant privilege. But we can see here this is a very good window into what the end game is and what China is trying to do. And we should remind ourselves before the end here that China does play the long game. Americans, the U.S. government system, the way it's set up, we play much more just a 4-year presidential cycle, or even a two-year cycle for various congressional seats. But what China is basically doing, and what I hope you take away from this video, is that the Chinese government, the Chinese Communist Party, is exploiting the current financial system, which is based on U.S. dollars, in order to take over the world's mining, gold mines, industrial metals, the world's crude oil, and the world's food production. Now, obviously, China has to import a lot of food. They have to import a lot of energy. So this makes sense, and I don't blame the Chinese government for doing what is in their own interest. I just worry that the rest of the world, ex-China, is not quite aware of how serious the situation is. Obviously, with COVID, especially in the U.S., we all of a sudden didn't have pharmaceuticals, we didn't have masks, we didn't have protective gear because it was all made in China. Obviously very bad during a pandemic, and that gives a real window into what happens when you outsource all your manufacturing. But China's goal, in addition to feeding its people and having enough energy, not having to import that and having to be dependent on U.S. dollars, the goal is to displace the U.S. dollar as the world reserve currency. And this is how they're slowly doing it, by taking over hard assets, by taking over commodity production, and by slowly moving everything to being priced in yuan. Now, the seeds of its own destruction were already present with the U.S. dollar because of something called the Triffen Dilemma. And basically what this means is that if you become the world's reserve currency, it's great at first because you can get cheaper imports. Your currency will be sort of overvalued and give you a lot of purchasing power because everyone wants to hold the world's reserve currency as a reserve asset and also in order for trade. But the sort of deal with the devil you make is that you end up hollowing out your middle class and working class, all your manufacturing, your factories, including things that are very national security dependent, like pharmaceuticals, defense, weapons production, etc. A lot of this gets outsourced to foreign factories. And in addition, because you're importing so much stuff, you end up having a negative net investment position, which basically means that you are selling off chunks of your country to foreign investors who may or may not have your best interest in mind. And this is what's happening, obviously, in the pork industry with a lot of farmland, etc., now happening globally with mining, crude oil, and other commodity production. Hope you guys found this video helpful. Be sure to hit that subscribe and like button. If you did, hit the notification bell so you'll be notified when I post my next video on YouTube. And let me know your questions and comments in the comments section below. Thanks a lot for listening, and I'll see you in the next video.